Hello everyone. Uh, am I audible to everyone? Can you please confirm in the chat? There's a chat option there. Okay, that's good. So we are just about to start the discussion on investment banking. So let's wait for just 2 more minutes and then we'll start. We are actually waiting for many people actually. They are about to join. So we'll be starting very soon. Is there anyone in the session who doesn't understand Hindi? You can type I am. Is there anyone in the session right now who doesn't understand Hindi? Okay, that's good. Mr. S. Vijay Raghavan, do you understand Hindi or not? Okay. No issues. I'll take my entire session in English language only. I just wanted to confirm if there would be any some time that if I want to explain something in Hindi, then I should be able to. But no issues. I'll still manage to speak in English only. Okay. In the meantime, many other people join. I just want to understand your qualification. Just type your qualification and the year of passing. Like someone who did MBA Finance in 2020. Just type that MBA Finance 2020, BTech or something else. Whatever you have, you just type in the chat. Okay, BCom 2020, BCom 2021, that's good. CA Inter Anuradha, very good. Okay, BBA is running, very good. Okay, that's good. अंकुर सर प्लीज आप अपनी वॉइस थोड़ी कम करिए, इट्स कमिंग टू मी बैक. ओके, नमीश जैन सी इंटर. ओके, मेहुल दुबारिया BSc. What is VOC? B Bachelor VOC. Radhika? Okay, many of you have written in chat privately. You are directing privately. Bachelor of Vocational Studies. Okay. So please make it everyone. When you are typing something in chat, send it to everyone. Okay, very good, बहुत बढ़िया, very good. So we won't be waiting more. Let's start the session. So I hope you have some idea what we are going to discuss today, but let me still walk you through what we are going to cover. So my name is Manoj Kumar. I have very short time with me to discuss with you about this very big topic of investment banking. So I won't be running you through about my profile and the profile of investment banking institute. So I'll simply start with the topic on investment banking. You can call it whatever you want: introduction to investment banking, how to make career in investment banking, or investment banking divisions, whatever you want to call it, you call it. I simply call it investment banking webinar. Okay. So these are some of the topics that I'll try to touch upon, like what is investment banking, how it is different from commercial bank, various divisions, departments or functions of an investment bank, what are the different profiles that you can work if you want to work in an investment bank, and what are the profiles on which you should not be working if you are looking for a finance profile, right? Within an investment bank, there are finance profiles and there are non-finance profiles also. So what are the key skills required for each department or each profile? I'll try to cover that. What are the common skills required in each department? There are certain skills which are required everywhere in each department, and there are few skills which are required specifically in that particular department. Okay, I'll try to cover that part also. We will discuss about these few topics like what is financial modeling, what is valuation, Mna, Pitchbook, what is a company profile, what is project financing, infrastructure projects, renewable energy projects, road project, commercial real estate project, apartment type of projects. So I'll try to touch upon that if I have sufficient time with me. This is my I have been a trainer with various companies. I teach through videos. I teach in my open public workshops. But this is the kind of webinar which I have not been conducting very frequently. So I don't know how much time it will take to cover these topics when I am briefing things. When I touch upon things very deeply, I know how much time it will take. But I will be walking you through with these things. So these models I will be showing you during this webinar. Someone is asking me question in how long will this webinar last? I think it will go for 3 hours till 7 o'clock. I am recording the webinar, and recording will be given only to those students who will stick with me till the end. And I am going to give you something more than that. If you stick with the webinar till the end, I'll give you some sample research reports. I'll give you some sample pitchbook and company profiles. I'll give you some sample financial models, maybe some valuation models, and I'll definitely give you this free access to my basic financial model. I want to tell you this thing, it is going to be basic financial model which will give you an idea how do we work on financial statements, how do we forecast financial statements using Excel, what are the different criteria as to forecast financial statements. That's the kind of thing you will learn in this basic financial model. But it is not a financial model which you can use to make a model like solar power project, no, an airport project, no. This is something which will give you an idea on how do we prepare a financial model on a basic level, or companies like FMCG companies financial model you will be able to prepare based on this knowledge only. Please keep your chat off for some time, let me discuss things. Okay, chat is appearing on my screen, so people are writing there, so give me some time. Hi, good evening. Will there be till the end? See enter. Okay. So give me some time. Don't write anything in chat. It is disturbing me. I'll give you some time where you can ask questions, and I'll try to answer your questions for all the students. Okay. These are some of the other profiles which are in finance. Okay. If I have time, I'll touch upon this also, like project finance, credit research, credit rating, private equity, venture capital, consultancy firms, what kind of work they are involved into. I'll try to touch upon that also. Now, look at this, what it is in your screen. These are the departments within an investment bank. We have a research department, we have sales and trading department, fundraising department, merger acquisition department, underwriting, restructuring and reorganizing. So now in some of the books, they categorize them into 4 segments. Sometimes they have 8 segments. Sometimes there are only 2 segments. For study purpose, I have defined them into 6 segments. And I'll let you know which departments are for you, in which you would like to work as a financial analyst, and which profiles you don't want to work because they are not core finance jobs. I'll touch upon that. Okay, so are you now ready? Shall we now start? Am I audible to everyone? Give me yes in the chat. Okay, very good, very good. I want everyone to be, whenever I say that please be active in chat and respond to me, please respond to me. I'll feel good and I'll teach you something which you always wanted to learn. Okay, so before we discuss about these departments, let us first understand what is a commercial bank and how it is different from investment bank. our core discussion will revolve around investment bank only, but I want to discuss for roughly around 5 minutes on commercial bank. So what are commercial banks? Commercial bank, for example, are ICICI Bank, SBI, PNB. Okay, these banks can be private, they can be government, and these banks can be foreign banks. So these are all commercial banks. Commercial banks are actually involved, they are kind of middlemen. Okay, middlemen between people who have surplus funds and people who have deficit of funds. So people who have surplus of funds, what they do, they deposit their funds with the bank, and this deposit is used to provide loans to the people who are in deficit of funds. So this is a debt instrument for them. Now who are the people who are providing deposits? They are corporates, they are retail investors like you and me, individual. Okay, and even government like DDA department, like corporation department. Okay, these, they will deposit their surplus funds with the bank, and bank will give some interest, maybe 4%, 7%. Okay, they will give them some interest, that will be an interest expense for the bank, and this interest expense will be the earning for these people who are depositing their funds with the bank. Now at the same time, this commercial bank, let's say ICICI, SBI, PNB, will charge to the people who have taken this loan. And who are these people? Again the same people, corporates, retailers like you and me, even government, they will be taking loan. And why do they take loan? Because they want to finance their working capital, they want to finance their capital expenditure, they are basically taking term loan. So for whatever purpose they are taking loan, maybe home loan, maybe credit card. So basically what is happening, surplus fund is going to the people who are in deficit of funds. Now they will be charging something, interest income, they will be charging interest rate. So interest expense is, let's suppose, 4% to 7%, which will be less than the interest the bank will be charging from these people, that will be, let's say, 7% to 25%. So the difference between the interest rate expense and interest income is the profit of commercial bank. So how commercial bank is making money? Through interest rate difference. Clear? Now this is not something the bank, investment bank, is going to work. So what is investment bank is going to do? Till now I hope everything is clear. So we want to now proceed our discussion towards investment banking, but before we proceed towards investment bank, I have to explain you concept of property broker. I know that you want to discuss about investment bank, but I have to set my discussion on investment banking. But before that I want to cover a topic on property broker. Property broker and investment bankers are same to some extent. Let me explain you how. So again, property broker is a middleman. Who is it? He is a middleman. Middleman between whom? Buyer and seller. So buyer, what is buyer trying to buy? He is trying to buy a flat, maybe plot, maybe some shop, maybe some commercial office space, or whatever. So let's think of a flat that you are trying to buy. Let me say I am trying to buy. My name is Manoj Kumar. Okay, I want to buy a flat which I have already bought around a month back. So I wanted to buy a flat. So what I'll do, I'll try to find some flats, but I directly don't know any seller. If at all I know any seller, how many people I know? Maybe I know 1 or 2 or 3, only 2-3 people I know. Or if seller wants to sell something, how many buyers does he know? Maybe 1, 2 or 3 only. So what will happen if I buy the flat directly from the people whom I know? then I do have very less options available with me. Then what will happen, I'll be finding something, I'll be buying something which is actually not fitting my requirement. So what I'll do, I'll go to property broker. Property, give me just 5 minutes and then we'll start our discussion on investment banking. So I'll go to property broker. Now this property broker knows hundreds of properties. He has hundreds of properties that he has available to sell. So now if I go to the property broker, I can look at hundreds of properties which are available in the market which I can buy. Now if I take my decision, I'll be taking my informed decision. What is the decision I will be taking? I will be taking my informed decision. So what are the purpose? What are the reasons I have gone to the property broker? First is the lack of options. I do not have many options available with me. If I go to the property broker, I'll have more options. Now this property broker also knows many of other property brokers, so who have access to thousands of properties. So if these 100 properties are not suitable for me, then I can route to these other thousands of properties also. Clear? So I have lack of options, so I don't go directly to the seller, I go through the broker. There are several reasons of going to the broker. One of them is legal issues. I may not be able to do the due diligence of the property. I am not able to do the documentations properly. I cannot verify whether the document which seller is providing me, I may not be able to check whether they are genuine documents. But who can do this? This property broker can do it for me. Okay, for everything that I have just discussed, for arranging the meeting between me and the seller, he will be charging me something called commissions. Okay, commissions, or you can say fees. It can be 1% or it can be, let's say, maximum 2%. Now there can be one property broker or there can be multiple property brokers involved within this deal when I am buying this flat. Like I am giving you one real example. Manoj Kumar wanted to buy a flat, so he hired someone called Sandeep, who is a property dealer. Okay, he knew some of his friend, Mr. Yogesh. He is also a property broker, and this guy knew someone called Vaneet. So Manoj Kumar directly did not know Vaneet. I knew Sandeep. Sandeep knew Yogesh. Yogesh knew Vaneet. Vaneet is the seller of the property. Now, due to this, what happened? They arranged a meeting and the property deal was done. Manoj will now give 1% of commission to Sandeep, and Yogesh, Mr. Vaneet will give 1% to Yogesh. Just keep this example in your mind. I am going to connect everything of investment bank with this example. Is it clear? Now confirm in the chat. Someone is writing in the chat, broker is a person who help in dealing between suitable buyer. When I ask you question, then you please comment. If you have question, then type. Okay? Yes. Are you clear with this now? I hope everyone is clear. Good, good. Now we are getting into the discussion of investment bank. Now this investment bank will also work like a property broker, but here the difference comes. Mr. Investment Banker, let's say Axis Capital or ENY, ICICI Securities, what they will do, they will also charge fees and commissions. Okay, just like property broker, they will also charge commissions. For what they will be, this investment banker will be charging fees and commission. There are certain activities that they are involved into. Okay, so let's suppose there is a corporation. Corporation, first of all, let me tell you one important thing. Investment banker don't deal with individuals, retailers like you and me. Their clients are asset management companies like mutual funds, pension funds, large corporates, HNIs, high net worth individuals, governments. These are some of the clients of investment banks. Here property broker and this commercial bank was dealing with people like you and me also. But investment bank is not going to deal with people like you and me. They are going to deal with large corporates, large big HNI clients or big governments. So I am giving you an example here. What kind of activity they are involved into? A corporation is looking for expansion for whatever purpose. He needs funds. So now this corporate can be, let's say, any IB institute, IB institutes, or let's say Ruchi Soya. I hope you will know that Ruchi Soya has very recently come with an FPO, follow-on public offer. So now what they want funds for their expansion or for any other purpose. Let's say they want to clear their existing debt, or someone in the company who is a promoter want to exit from the company. So some additional investor will be required. So company needs fund. Now company does not know, may not be able to decide whether they have to raise funds through debt or through equity. Company may not be able to find out. Let's suppose company is able to find out that company has to raise debt to meet its requirement. Then company may not be able to raise large amount of debt on its own. It needs investment banker to handle all the procedures, all the financial things and everything related to issuing of debt. If the company wants to raise equity, first of all company cannot decide how much funds will be required, how that fund will be raised, how financial modeling will be done, how valuation will be done. Everything the company may not be able to do it. Like in this case, in case of property broker, I cannot do everything on my own. So that's the reason I went to a property broker. If I do everything on my own, what will happen? I'll be involved in these things for longer period of time. If I am involved in all these things, who is going to create, who is going to make my videos, who is going to take the webinar which I am taking? Okay, who is going to conduct the classes in colleges or corporates or in public open public workshops? My entire business will collapse if I get involved into these things. So here also what will happen, if the company which needs funds, if it will start doing everything for which it does not have any experience, then its business will also hamper. They don't want to hire professionals only for this thing. This particular task of raising debt or raising equity will be over in couple of months. So they don't want to hire a team of professionals who will do these things and then the company will pay them for longer period of time. They don't want to hire. So what they will do, they will hire an investment bank like Axis Capital or SBI Capital or company called ICI Securities, Morgan Stanley, Merrill Lynch, ENY, Evaluation. So there are so many investment banks that the company can hire. Now, what will happen? Investment bank, let's talk about equity. If the company wants to raise equity, then if the company is not already listed, it has to issue IPO. IPO stands for Initial Public Offering. If the company is already listed or if a company is already has issued shares, then it will come out with FPO. FPO stands for follow on public offer. Very recently Soya had issued FPO, follow on public offer. So Soya, Ruchi Soya had to hire a couple of investment bankers to handle the entire procedure of raising funds through FPO, and it involves so many steps in between the announcement of raising the FPO until the amount comes to the company. There are so many issues. I'll be touching upon that in just few minutes. What are the steps involved into? So am I making sense now? Now if this IPO, FPO is done, if the deal is done, if entire process is done, investment bank is going to charge commission and fees. That can be 1% or it can be any other percentage, maybe 2%, 3% or so. Clear how investment bank makes money? Yesterday it become debt free company also. Yes, soya company actually raised FPO, actually raised equity through FPO because they wanted to clear their existing debt. That is one of the objective of raising debt. So it earlier wanted to clear its 80% debt, but FPO was so successful that they raised so much amount and they cleared 100% of their debt through the equity which they raised through FPO. Now, am I clear till now? I am now going to discuss about merger and acquisition. Basic discussion on merger and acquisition. Yes, everyone. Please be active in chat. So investment bank makes money, makes its revenue through fees and commission. It is not going to make money through the difference between interest rates it is paying and interest rate it is charging through loan. So what if there is a company? Companies, let's suppose, have you heard about PVR and Inox? Merger is not yet done, but announcement has been made and they are planning to go for merger. In next couple of months they will be doing it. Okay, you have not heard about it. Please start reading finance newspapers, let's say Business Standard or Economic Times or any other newspaper that you like, and find at least two news on a daily basis from the newspaper and keep them safe with you all the time. So what PVR did, PVR had to hire an investment bank. Can anyone tell me the name of the bank that they hired? And Inox, the investment bank they hired? PVR hired Axis Capital and Inox hired ENY. Now, just think of an example of this. Here Manoj Kumar hired Sandeep and Vaneet hired Yogesh for the deal of flat. Now here for this merger, PVR hired Axis Capital and Inox hired ENY. They will be doing all the related works for this merger, and both of them will be charging a certain percentage of the deal. So now I am getting into the discussion in detail about IPO first. Do you want me to give you the detail about IPO, FPO and MNA, or should I simply start discussing some basic things only? Yes, anyone? But it will take me roughly around 30 minutes only on IPO. However, when I teach IPO in my class, it takes me 4 hours. Why I can see only few comments about for this question? Yes, no. Okay, I'll be Vimal Shukla. I'll be touching on MNA also, and I'll also show you the MNA model. But for that, you have to stay with me for the next few hours. I'll show you the MNA model, valuation models, uh, pitchbook, company profile, everything I'll show you. But let's have some discussion about their theoretical concepts first. There will be few people who don't know anything about IPO, anything about MNA, anything about financial model, and there will be few people who know something. So before we discuss about IPO, I want to touch upon funding process. Just 2-3 minutes of discussion on funding process. So it can be divided into multiple stages. There are people who divide it into 3 stages. There are people who divide into 4 stages. I'll be dividing it to stage 4 only. There are total 4 stages in which I am dividing it. So the first stage in which we get promoter funding. When a company starts, The promoters will invest something into the company and the business will start. Promoters fundings comes from their own personal pocket, means their savings, their family and their friends. Like when I started this institute roughly around 17 years or 16 years back, I started this institute with my own personal savings, which I made through my work experience in investment banking. So it started. Later on, when the company starts bigger, or when the company needs more funds, then they will enter into the called stage 2. In the stage 2, what we have called something called angel investors. Give me only 5 minutes. I'll not detail you more things. I'll simply touch upon things. So in stage 2, they have someone called angel investors. So initially when the company started, then after some time, maybe 6 months or 1 year, when things were set up and company was set up, and now the company needs more fund, they want few crores, let's say 5 crore or 10 crore rupees, then they will search for someone who would be called angel investors. Who can be this angel investor? It can be some HNI, some high net worth individual. He is also called private investor. He can be anyone, maybe Amitabh Bachchan, angel investor. Okay, he is also called seed investor. I'll give you this PPT. Please don't write in chat. I'll give you this PPT. I'll give you the video also, but only those people will get it who will stay with me till the end. Okay, seed investors, angel investors, private investor. So they are HNIs. Now this is still a risky business. At this stage, the business is risky. Things are not set up. Market is not absolutely very clear, but they know many things. Business has been set up. Products have been finalized. Things are done. It is in the early stage. But I said it is still in the early stage. After some time, when things have been decided, market has been finalized, brochures have been finalized, office has been set up, furniture has been set up, but we want to expand and we need, let's suppose, 50 crore or 250 crore. At this point of time, I'll call it stage 3. And at stage 3, I'll go to venture capital or private equity firms. Angel investor also appoint investment banker to find worth of the company. Sometimes you can also talk to investment banker to find an angel investor. It's other way around. I'll go to some investment bank and they will find some angel investor who would invest in my company. At this stage, investment bank will charge some percentage, but at this time, see, if I appoint an IB at this stage, the investment amount is so low that I cannot go to a bulge bracket investment bank. There are two types of investment bank: boutique investment bank and bulge bracket investment bank, right? So I'll go to some boutique investment bank. Please keep yourself muted. So someone had written a comment in the chat, so I just replied to that if at stage 2, if I go to some investment bank, then I'll go to a boutique investment bank which deals with small investors also. Okay, so at stage 3, at this point of time also, the business is little risky, but various things have been settled and we are in a position to commercialize things. What did I say? Commercialize the business, and we want to expand throughout the country, or let's say throughout the state. At this point of time, I'll reach to some venture capital or private equity firms. So in which particular type of business these investors will invest? Where there are large opportunities of scale. Okay, there is a huge potential. In just 2 minutes of time, I'll be getting into IPO discussion. When there is a huge potential, then PE and venture capital firms will invest. There is a huge competitive advantage. Okay, and even the product is unique product. This product can be physical product or some software or something else. Now what will happen? This private equity or venture capital firms will be investing through LPs. LPs means limited partnerships. They will create a fund. This fund will be managed by a committee, and people will be investing in that fund. Who are the people who are going to invest? They are pension funds, mutual funds, portfolio manager, big corporates, HNIs, but definitely not people like you and me. So that amount will go to this fund. This fund will be managed by this particular committee, and they are members of private equity or venture capital firms. Now, when this business will grow 10 times, 5 times, or something like that, and at this point of time, I need money like 5,000 crore. I'll enter into stage 4. In stage 4, I will look for IPO. And even some previous stage, I might have taken some debt also. I'll talk about this. Now, why I want to go for IPO? Anyone, any idea? Please write in chat. At stage 4, why I am going for IPO, which is called initial public offering. Yes. Raise capital from public, that's the outcome. But why I am not going to some another private equity firm? Okay. Yes, I am getting good examples here. So first, why the reason of IPO is I am going for expansion. Second reason could be clear debt. I may have raised some debt, which I have just said that in stage 1, stage 2, or stage 3, I may have taken some debt. So I want to clear the debt. And maybe some investor, some promoter, investor wants to exit. So what he will do? He will issue that particular percentage of shares to the general public, and he will exit. He will make his money. So at this point of time, this venture capital or private equity, if they want to make money and leave, then at this point of time they can leave. Some other people will get into, will become the investor of this company. So this was an example of Ruchi Soya. They wanted to clear the debt, so they came out with an FPO. Just for example, I'm putting it here. Now let's talk about IPO as a whole process. So IPO process, let me clarify one thing. What I am going to discuss now in next 10 minutes only, it actually takes roughly around 4 hours, to have full complete discussion. But I am going to give you some insights only in next 10 to 15 minutes. Okay, so please bear with me. It's not a complete detailed training program. It is a program which will enable you to think positively and think in a sense what kind of profile it is. I'm just giving you an exposure about investment banking. You don't get to know each and everything. You need to stay with me for a couple of weeks for that. So I'm going to tell you something about IPO. So the first step in the IPO process is you have to hire investment bank. This investment bank is called lead manager. This investment banker is called lead manager. This lead manager will further appoint participant manager if needed. If the lead manager is capable of handling the entire IPO issue, he will handle that. Otherwise, he will look for some more participants who will be called participant manager. Just come back and let's talk about this just for a second. Sandeep himself was not able to find a good flat for me, so he talked with Yogesh. Okay. Similarly, in this case, when this lead manager, maybe Access Capital, is not capable of handling the entire IPO issue, then he will hire or recruit or get into a term with other participant managers who are also investment bankers. So if the issue is of, let's say, 5,000 crore rupees, and lead manager himself cannot handle everything, so he will hire five more people or three more investment bankers and make them part into this entire IPO issue. So on what basis the company will hire investment banker? On what basis the investment banker will be hired? The first point is the reputation and his historical track record. Like very recently, which I was talking about, Ruchi Soya, they have come out with an FPO already. Then if someone else knows about this FPO and then they also want to come with an equity issue, so they know that this FPO was fully subscribed and it was fully successful through this particular bank, so I have more possibility of hiring it. So someone who has already reputation of coming out with an FPO IPO process, then I have the confidence of hiring them for my particular equity issue. What can be the second? Sir, may I ask question? Yes, definitely, Nikhil, you can ask me, but type in the chat, don't unmute. Type in the chat, I'll try to answer that. Okay, that was the first thing. There may be some research quality in the sense, I am coming out with an IPO, so I have to prepare the financial model, but I as a company cannot prepare the financial model. Investment banker will prepare the financial model. He will do the valuation. He will do every type of analysis. So I'm talking about that analysis, financial analysis here. So he has good research quality on which investors believe. People who will be investing in my IPO, they will be looking at this research. Only on basis of that they will be investing in my IPO. Clear? Next point, distribution expertise. Distribution expertise. Writing is very bad here, I know that, but please, but I'm saying that you can understand that. So distribution expertise in the sense, uh, someone who has already raised funds through IPO, then he already knows the process, he already knows who are the investors, he already knows mutual funds, pension funds, other asset management companies, portfolio managers, corporates who are frequently investing in IPOs. So they know them. So the investment banker already has a list of huge number of investors, so they won't be finding it very difficult to make my IPO successful. So I'm just giving you a couple of examples based on which the investment banker will be higher. Next example could be prior relationship. Like if that investment banker has helped me earlier also in raising debt or raising equity, then I have some prior experience with him, so I will directly come to him and hire him for my new set of tasks. Second, due diligence. Due diligence is kind of auditing of the various informations. Like in this case, property broker was doing the due diligence of legal documentations, of old financials, of properties, of everything. He was doing the due diligence. So here in this case also he will do the due diligence. And what exactly he will be doing? He will be doing the underwriting, a very important part in IPO process. First step to become investment banker to get there is guidance, finance sector, degree in finance. Nikhil, I'll be coming to this part at the end of this webinar, how you can get into investment banking. This is the question someone is asking in the chat. So what do we need to become an investment banker? I'll be coming to that part at the end of this webinar. So underwriting is a process in which the investment banker is guaranteeing that I will make this IPO fully subscribed. I will make it fully successful. If a part of this IPO is not fully subscribed, then unsubscribed portion will be taken by the investment banker. Let's say I want 100 crore rupees through this IPO, but through public I could gain only 95%. The 5% will be taken by investment banker. This is the guarantee. This is what they are underwriting, that if in case it is not fully subscribed, then unsubscribed portion will be bought by the investment banker. So this is what they are guaranteeing here. Okay. They will also do syndicate of banks. Like here I was saying, they will hire a lead manager, and then they will also hire few more participant managers. So if the bank itself cannot raise 100 crore from its own resources, then they will contact with many more property brokers, many more investment bankers, who will sell this 100 crore of IPO to their particular distribution, through their particular distribution channel. Am I making sense here? Are you getting this point? Underwriting and syndicate of bank. What do I mean by that? Yes, anyone? Please confirm in the chat. There are 46 students right now. I want everyone to comment here. Are you understanding underwriting and syndicate of bank? Very good, very good. So what is the next step that they have to do? The next step is red herring prospectus. In the red herring prospectus, thank you very much for commenting in the chat. In the red herring prospectus, there are a lot of information that company or investment bank has to provide about the company. First information they have to provide is the business description. Okay, you are writing the short format. Red herrings prospectus. They have to provide the business descriptions. In what particular business, in what particular market the company is operating into. Promoter details. Who are currently the owners of the company? Who are the promoters? Competitive advantage. What is the advantage that the company has? Okay. There are various other things like historical data, and information like what should I call, risk, reward, and something called KPI, key performance indicators, their historical data and their performance in the future. Key performance indicators means ratios they have to provide, and they also have to provide forecast. Now please comment in the chat, can we as a company, can Ruchi Soya do everything that investment banker is doing for Ruchi Soya? Can actually it can actually be possible for Ruchi Soya to do all of this thing? Yes, everyone. Good. So you understand the concept now? If Ruchi Soya wants to do it, then who will do the business in which Ruchi Soya is involved into? They cannot do that activity. If they try to do it, their particular business will get hampered. So something which should be done by a professional, let them be done by a proper professional. If I today want to open my office, IB Institute office throughout the country, then I can run my institute from everywhere, right? But I need funds. I am good in preparing financial models. I am good in valuation, but definitely I need support of someone. One investment banker, he knows the process, but there are capacity of an investment banker. So there are capacity of me, there are capacity of Ruchi Soya, there are capacity of Inox and PVR. So everything cannot be done by everyone. People responsible for that particular activity should be done by them only. Now, In red herrings prospectus is an important document which we have to provide to the investor and the authority. Red herrings prospectus in which these informations will be provided like business description, promoter details, competitive advantage, historical data, risk and reward, KPIs, forecast. These are the some of the important informations that we have to provide in the red herrings prospectus, so that people who want to invest in our IPO, they have full detailed information. Swiggy, Paytm, when they came out with their IPO, they had to provide their red herring prospectus before they raise funds through IPO. Clear? That is the part of IPO process. You have to provide it. Now, within this due diligence, there are many more things which are involved. Like, let me write it here only, and then I'll exit from this part. Filings. There are so many other filings that they have to provide with SEBI, under Company Act, to NSE, to secure under Security Exchange. So let me write just SEBI here. What different type of profiles are there, that what different types of files they have to provide. That is what investment banker will do. Okay. In the next step, step number 3, anyone who can comment on what will be the step number 3. And this is where we all actually wanted to work. I don't want to work here, I don't want to work here, I don't want to work anywhere in this process. But in the third step, I definitely wanted to work, and I have been working on this particular profile only. Let me tell you this thing also. Operation, Vimal, okay, front end, okay, no, you are talking something different, I am asking something different. So this is actually pricing of IPO. At what particular price I will issue my shares to the people. I know that I need, let's say, 200 crore. This is my requirement. Okay. But at what particular price should I issue my shares to the company, to the investors? That is what is pricing. Okay. And this is where all of us would like to work if we want to work in the finance profile. So what we have to do here? We have to prepare a financial model. We have to do the valuations of company. We have to do IPO valuations. Okay. How do we prepare financial model? In financial model, we first have to do historical analysis. There are so many things that we have to do. I'll be showing you the financial model in some time. Okay. I'll be doing historic analysis. I will taking assumptions. I'll be preparing my forecast and scenario sensitivity analysis. Then in valuation, I'll be doing my DCF valuation, which stands for discounted cash flow. Then there is a technique called relative valuation. Within relative valuation, there are two techniques called trading comps, and there is a transaction comps. I am telling you orally what is DCF valuation. Do you want to understand DCF valuation, or shall I just proceed with the next step in IPO valuation? See, as I told you, if you are active in the class, I'll be actively teaching you many more things. Okay. Someone is saying that let's discuss. However, DCF itself is a 6 hours of training, but in 2 minutes I'm telling you what it is. It takes me 6 hours to teach you practically. So DCF is a technique. Just listen to me very carefully. Close your eyes and listen. I'm not typing it here. DCF is a technique in which is based on the principle. DCF is a technique which is based on the principle that value of any company will depend on future expected cash flow. So company's value is dependent on future expected cash flow. If we expect higher cash flows in the future, the company's value will be more. If we expect less cash flows in the future, then the value of the company will be low. This is what DCF valuation means. Within DCF valuation, there are various methods like free cash flow method, economic value added method, dividend discount model, adjusted present value model, LBO model. So there are various models within DCF. But what is the principle of DCF? It says the value of company depends on future cash flows. So company's future cash flows will decide the value of the company today. That is what is DCF. So in financial model, you are forecasting cash flows, right? In financial model, you are forecasting the cash flows of the company in future. In DCF valuation, you are discounting them. There are so many things which you do in DCF valuation. Let me just tell you 5 steps. Some people are typing in chat, so let me, in a minute only, I am typing the steps in DCF valuation. You will forecast cash flows. There are 2 models: free cash flow to firm, and you can also forecast free cash flow to equity. These are 2 types of cash flows which you can forecast. Second step would be discount rate. See, this is a theory how to find risk to discount cash flow. Again, that will take me 15 minutes to explain you the risk issues. So forecast cash flows, these are the 2 models which you can use: free cash flow to the firm and free cash flow to equity. Then second step is to calculate the discount rate. The discount rate can be WACC. WACC means weighted average cost of capital or just cost of capital. Discount rate, if you are preparing free cash flow to the firm model, then cost of capital will be the discount rate. If you are forecasting free cash flow to equity, then cost of equity will be the discount rate, and we use CAPM model for this, capital asset pricing model. In the third step, we forecast terminal value. There are actually 2 methods to forecast terminal value. One is perpetual method. Just in 2 minutes I am going to leave this topic because I am thinking we are stuck somewhere. So perpetual method and multiple method. These are 2 methods. In the fourth step, we will calculate the present value of free cash flows and free cash flow to free cash flows only. If you are forecasting free cash flow to the firm, then the present value which you will get will be called enterprise value. Okay, and if you are forecasting free cash flow to equity, then the present value will be called equity value. In the fifth step, you will calculate the share price. This share price is going to be the price of the IPO. At this price, we are going to raise our 200 crore. But this is not just one thing. We will also do relative valuation. Multiple techniques will be used to find the particular share price. Did you get my point? This step which I have just written in 2 minutes, it actually takes 6 hours to understand the theory behind and the practical application. I am just telling you something here. Okay, so what we are actually covering here, let me just brief you again. So we were actually talking about what is an investment bank. We discussed that investment bank is involved into IPO and he is involved into M&A, merger and acquisition, right? So we were talking about IPO. So within IPO, what we have discussed, that they have to hire investment banker. Investment banker will do the due diligence. Investment banker will do the financial modeling, valuation, IPO valuation, everything he will do. Within that, I was telling you that he will be using DCF valuation. In DCF valuation, this is what he will be doing. So I am telling you, this is the profile where financial models are prepared, where valuation will be done, where IPO valuation will be done. This is where you are going to work, not at this place where you have to do the due diligence. Yes, there are people who are MBA finance, CAs, commerce graduate, they work in this profile because they don't know this. That is the reason they are into due diligence. And due diligence, there is no much finance work. See, red herrings prospectus, underwriting, filing with SEBI and other authorities. Where is the finance work? There is no finance work. If at all there is, it's just a 5 to 10% of finance work. This is where the entire finance will be used. Whatever you learnt in BCom, MCom, MBA, CA, CFA, everything will be used here. Yes, those things which you have learnt in your academics are theoretical things, but their application is here. Next step is to talk about distribution. I'm just leaving this now by writing the steps only. In the let's say step number 5, application process. Application process will start. In step 6, allotment will be done. In step number 7, listing on NSE or BSE will be done. Under each step there are various steps. Like in this case I have told you many things. Due diligence mein kya, what we have to do under due diligence, what we have to do under step 3 when we do pricing. Under distribution also there are many things. Under application there are many things. Under allotment there are many things. When we go for listing there are many things. So I just talked about something which I think is important. However, I can discuss more, but I can see I am only touching 5 and I have so many more things to discuss with you. So are you now okay? Shall we now talk about basics of M&A also, just like I talked about IPO valuation, IPO process? If you think that session is going it's boring, I know where you will find very interesting. Okay, someone just said no, it's not boring. Okay, I'll show you the financial models which are already prepared. Really interesting. Thank you. Areva, I enjoyed this sentence. Interesting, knowledgeable. Very good, very good. बहुत बढ़िया. Thank you very much. Actually, just what should I call it? I'm not getting the word in my mind. It's a disclosure. I have not been conducting this kind of free webinar very frequently. Yes, I have conducted webinar in corporates, but they are specific to certain topic like only M&A, only IPO valuation, only LBO valuation, only something, only ratio analysis, only Excel. So there I know I have been given 6 hours. So 6 hours is good enough for me. Here I have to cover so much content, but I have less time. So that is my issue. So I'm just little curious whether I'll be able to do a good job today. It's a new thing for me. Less time, more content. Thanks Gaurav, Jairam. Thank you very much for writing this thing what you have written. So you wanted to talk about M&A, right? Let me just brief you. This PPT has come here. I'll talk about M&A also in just 5 minutes. So commercial bank I was talking about, these are commercial bank, private bank, public sector bank, foreign bank. Leaving this part, investment bank, bulge bracket investment bank and boutique investment banks. Okay. However, there are people who have divided investment bank into multiple other categories also. Like boutique investment bank is divided into 3 more segments: upper boutique, middle boutique, and lower boutique, something like that. Small boutique, medium boutique, large scale boutique, something like that. Okay, Mansi, if you are okay to cover this topic till 7 o'clock, I am okay to teach you at till 7 o'clock, and I'll teach you many things. What is an investment bank? However, I have told you about it. Just still, let's go through this PPT because I prepared it, so I have to show it. Investment banking is a specific division of banking which helps other companies, governments, and other companies, governments, and corporates. Companies given, corporates given. Okay. So, in what particular thing they help them? Raising capital via equity and debt. They help these people, these mutual funds or buy and sell companies through M&A. Basically, they are helping in M&A. Investment bank are helping their clients in reorganizing and settle the trades for both institutional and private investors. They plan and manage large projects. This is what I have already told you. Just it was a PPT, so just I have went through. Now, these are some of the examples of bulge bracket investment banks. Many of the banks you may not have heard about, like Investment or Ernst & Young, a very good company. I think there are so many of our candidates who are placed here. DSP Merrill Lynch company, I was just talking about Axis Capital. This is the lead manager. Barclays, there are many candidates of ours who are working there. So some of the examples, these are also bulge bracket investment banks. These are some of the, what should I call, boutique investment banks. There are, we have a list of 500 plus I banks. I'll give it to you. So don't worry about them. If you are, I'll give you this PPT also. I'll give you this PPT. Again, these are some of the, what should I call, boutique investment banks. These are commercial banks, private, public, every type of bank. Just going through, okay. Departments in investment bank, which is something that you wanted to discuss with me. These are departments, but let's talk about M&A first. Merger, and again I am telling you this thing, it takes me 6 hours to discuss theory and practical about M&A, but here I'll talk about M&A in 5 to 10 minutes. Let me see how much time I devote to this. When we acquire some other company, what is the purpose behind that? We actually want to gain synergies. That is the core objective. We want to gain synergies, means we want to increase our profit. Okay. So to decrease the competition as well. Sir, see, there are, in this way, if I talk about me, about M&A, there are hundreds of type of projects, hundreds of type of objectives, but everything, if you put them into one, what do you want? You want profit. I started my institute. Why? Because I wanted to teach. I have passion for teaching. I know financial modeling and valuation. I had practically applied them. I had seen many people in my company who did not know financial modeling and valuation. So this was an opportunity. So these are the reasons why I started institute. So there can be hundreds of more objectives which I can give you why I started this institute. I think people in India are not getting quality education outside in their academics. So I started this institute and I am providing this training. They are the reason, but actually, what is the reason? Profit. Yes, everyone, please let me know. Did you get my point? When you want to do M&A, there are hundreds of reasons. You want to reduce risk, you want to reduce expenses, you want to dominate the market, you want to do so many things. But what exactly you want? In short, you want to increase your profit. Clear? So, we want to see, what do we want to see? We want to see the profit. So as a financial analyst, when you will be working in the investment bank, you will actually be, see, I don't know now where actually I will need a blank Excel sheet. So I am adding sheets wherever I need. So one of the model I am, yes, wealth maximization is one of the reason. So ultimately it's a profit. So when you will be working in M&A, there is a model called accretion and dilution analysis. This is a good model, and this is the objective that we will be able to see if the merger objective is met. So what we are going to do, we are going to look at diluted EPS after merger. After merger, if it is greater than diluted EPS pre-merger, then this deal will be called accretive. Accretive means profit making. Otherwise, we will call it dilutive. Dilutive means loss making. My question, and I want you to comment, profit making. अगर मतलब, if this is other way where diluted EPS is less than the post M&A, diluted EPS is less than pre-merger diluted EPS, then this will be called dilutive, otherwise it will be called accretive. Now my question is, if particular M&A that you have to analyze as a analyst, let's say you are working in E&Y in tax department, there is a called tax department in E&Y, transaction advisory services, where you will be working on this, and you are working as an analyst there. You have to decide whether this deal will be accretive or dilutive, whether the client should actually acquire this company or not. You have to advise, and I'm telling you the situation, that this is the situation. Deal is dilutive. Will you recommend your company to acquire this or not? Yes. Yes, everyone. So most of you are saying no. Most of you are saying no. Okay. But I am saying I may go for it. In which situation? This is the situation. Look at this chart. Initially for 1 or 2 years, this will be the situation. But after that, this will be the situation. Profit. Initially for 2 years we are going into losses, but after years the after 2 years the profit which we will be able to gain, that will offset the first and second year of loss. Now tell me, will you go for the deal? Gaurav, there is guarantee means you are analyst. You are analyze things today. If these two companies are merged, then there will be a cost of merging. There will be, we will be spending on advertisement that these companies are merged. So there will be some expenses which you will have to incur. But at the same time, there will be some expenses which you will be able to reduce. Which you will be able to reduce. Like in case of PVR and INOX, there are certain overlapping expenses which you can remove completely, and there will be something which you can where the synergy will be created, like you can reduce your expenses and you can increase your sales. Expenses will go down and sales will increase, then there will be a huge profit as a result of this merger. So what is the point of guaranteeing here? We are analyzing things based on the information today, based on the market scenario, based on customer preferences, based on other competitors, based on risk and reward. We are analyzing things today. As a financial analyst, this is your job. You have to, what you have to do? You need the target company's data. You need PVR target. You need both are targets here. So let's suppose one company is a target, one is acquirer. So target company and acquirer company's income statement you need. Okay, you will take this data and you will make one income statement. Now there will be some expenses which are overlapping, you will reduce them or you will remove them, and there will be some synergies which you will have to calculate. Synergy in the sense some additional incomes coming from additional profits, additional products, additional customers. Okay, so that you will have to add. So your profit, combined profit will increase. It is like 2 plus 2 is equal to 5. This one is nothing but synergy, and this is what we are actually looking for. Let me give you an example here. Let me just give you an example. IB Institute teaches financial modeling, and there is some another institute XYZ which is also teaching financial modeling. We both are competing with each other. If we both merge, then the advertisement cost, faculty cost, that will be removed completely or at least reduced significantly. Then 2 plus 2 will become 5 or not. Yes, Abhinav, working as equity analyst will be possible. Please write all this question on paper. You are typing in chat, write in your paper. That will help you when you will ask questions with me at the end of the session. Okay, so am I making sense here? Are you getting this point? Just to get more finance here, just to get more finance here, I am writing something here. I just want to teach you maybe 5 to 10 minutes only. So what I want to look at here, post merger EPS. This will definitely give you an idea what is the job of an analyst who is working in M&A department, valuation department in investment bank. This will give you an idea. I am damn sure about it. So what do I need here? Post merger profit and post merger shares of acquirer. Clear? How do I calculate this? Post merger EPS of the acquirer, post merger profit combined. I should write here combined profit, because after acquisition both the companies will be merged. Okay, and I'll take the post merger shares if it is a merger. If it is an acquisition, I'll take post merger shares of the acquirer. Now here what I have to do, post merger shares of the acquirer I have to take. How do I calculate shares of the company who is acquiring? I'll first take, if you don't understand things, just leave it, understand the main important part. Basic shares outstanding plus dilutions. If you don't understand dilution, leave it. Simply consider total diluted shares. Simply consider this part. I am talking about shares. Shares of acquirer plus shares issued. Issued to, I am acquiring the company, and let's consider it is a stock deal. It can be a cash deal also, but let's think it is a shares based deal. I have to issue shares to the target. So shares will be issued and I will have my total shares. Now these shares will come as a denominator, right? I need combined profit after merger. So what do I need? I need target income statement. I need acquirer income statement. Then I will have my combined net income. Then I will add certain expenses and I will add certain incomes. Then post merger net income will come. What are the different type of expenses? There are actually around 10 expenses. I am not writing here, it will make the discussion very complicated, and 5 to 6 incomes that we are able to generate due to this merger. So but actually happening here, post merger net incomes, income statement of target, income statement of acquirer, both will be merged. There will be some additional expenses, some additional incomes which we will be adding, and we will be getting our post merger net income, which we will take here. Then post merger shares will also come, which is here. How do we calculate shares issued? That is a very important thing. Very simple. Shares of target, the company which we are acquiring, there are shares of that company. We are offering something to it. Let's say offer price. Then it will give us the deal value. Just 5 minutes more and you will understand what kind of work we have to do in M&A department. So let's suppose there are 100 shares and we are offering 50 rupees per share. Total deal value is 50. Now we have to give certain shares to the target. Shares will be of acquirer. I am giving him my own shares, and the value of my share, acquirer share price. Just 2 minutes more and this topic is over. Acquirer share price is, let's suppose, 200. So how many shares do I really need to give? I just need to give 50 million shares to the target. See, I have to give this much of value, 5,000 rupees I have to give, but I am not giving him 5,000 rupees. I am giving him 25 shares where the value of one share is 200. So 25 into 200 is actually 5,000. Why I am doing it this way? Because it is a stock deal. There is an exchange of shares. Okay. Now these shares, acquired shares are, let's suppose 175, 25 shares are issued, so total shares are 200. So I'll take my 200 shares here, then whatever EPS will come, I will be able to decide whether the deal is accretive, whether the deal is dilutive. Now this will tell me the deal immediately next year, but I need to see the effect coming forward 2 years, 3 years, 4 years down the line. So I have to prepare a financial model for target and a financial model for acquirer and merge them. Then I will definitely able to decide whether this deal will be positive in long term or not. Yes, my question from you, are you getting it? Sir, to enter this investment banking industry, what should I do? Right now I am in final year of BBA. Side by side I am working in MNC. Once I finish my BBA, should I immediately join MBA or first work in this industry? Please keep these questions in paper for discussion at the end of the webinar. Definitely anyone from any particular background, let it be BTech, MBA, Finance, BCom, BBA, CA, CFA, anyone can get into the industry provided you have the required skill set. Investment banker need not to be only CFA, need not to be only CA. They can be anyone provided they have the skills of financial modeling, valuation, M&A, pitchbook, company profiling, analytical mindset. They need this. If you have it, you can make your career in this. If you don't, see, first of all, you should be a laborious student. Laborious in the sense you should have the mindset of studying. If you cannot study, then you need to develop the habit of studying, because in investment bank we have to study a lot. Because whenever there is a company which is coming for equity issue, do we not have to study about that company first before we actually prepare the financial model on this? A company is coming from Thailand, China, Pakistan, Bangladesh, London, Philippines, wherever. When I'm sitting in an investment bank as a financial analyst, I'm not dealing with the companies only in India. I am dealing with the companies from anywhere in the world. It is an international environment. So I will have to study about that company before I actually prepare the financial model, perform the valuations, something like that. Making sense? So now this question should not be asked anymore, that can we make career in that? Yes, we can make that career provided we have the required skill set. If after doing MBA finance or after doing CFA you don't know how to prepare financial model, how to do the valuations, who will hire you? Nobody will hire you. If at all you are hired, you are working in investment bank, but you are not working in the core finance profile. Getting it? In my office also, there are 5 types of profiles. There is a faculty, there is a counselor, there is an HR, there is an office boy, there is a placement head, there are visiting faculties. Are they not? There are. But within the coaching institute, what type of profile you are working on? That is important. So within an investment bank, in what type of profile you are working on? That is important. If you are in a hospital, everyone is not a doctor. There are accountant, there are who is the person who is supporting the doctor, nurse, there are medicine distributors, there are cleaners in the hospital. So there are different types of profiles within investment bank. There are research analysts, there are financial analysts, there are equity research analysts, there are M&A analysts, there are IPO valuation analysts, there are every kind of person. There are people who are working in CS working there, in some lawyer is working there, BCom, BBA, IT guys are working there. So every type of profile is there everywhere. So in which particular profile you are working, that is important. So if you are working in a financial analyst profile, you need the knowledge of finance. Clear? Clear? Yes. those students who are still in the class, I think now they are laborious, they are interesting in this kind of profile, and now they will be willing to discuss more about the departments. Okay, so first department, which is research department. How many of you want to go get into research department? Yes, I want. Type, right, I want. Me. Okay, me, you can type me. Those who are not even typing me, that means they are not interested. So if you are interested, then the answer should come immediately. Me, I want. Clear, very good. So let us now talk about research department. Let me tell you this thing. Within research department also there are some profiles which are not core finance profiles. Let's talk about research. So in this particular profile, what do we do? The main purpose, just not equity research, it is research department. The main purpose of research is to provide investors with detailed financial analysis and recommendation whether to buy, hold or sell a particular investment. They are there to recommend someone whether they have to buy, whether the investor should buy, sell or hold the investment. And what can be the investment? It can be a bond, it can be any commodity, it can be shares or something else. So it is not equity research department, it is research department. Be clear with that. Okay, now what kind of skills are required? We need, so I'll be focusing my discussion on shares. Let me be clear with that, because I am a product of equity research, definitely not bond or commodity. Theoretically I have studied about bond, theoretically I have not studied about commodity. Even I have practically done, theoretically studied about equity. So I'll be keeping my discussion focused only on this. So for equity research analyst, you need the knowledge of Excel, you need the knowledge of financial statements, means income statement, balance sheet, cash flow statement, statement of changes in equity, ratios. Ratios means definition, interpretation, calculation, everything you should be clear about it. And most important thing, you need to know the impact analysis. What do I mean by impact analysis? Impact analysis means if I take a loan and buy fixed assets, what will be the effect of it on income statement, balance sheet, cash flow and ratios? If I increase my depreciation by rupees 10, how it will affect income statement, balance sheet and cash flow? If I increase my stock based compensation, how it will affect? If I increase minority interest in income statement, if I take inventory on credit, how it will affect? If I sell on credit, how it will affect? If I issue shares, if I repay loan, if I sell fixed assets on gain, means there is a gain on sale of asset, then how it will affect my income statement, balance sheet and cash flows and ratios? That is called impact analysis. You have to be very clear with this. Okay, here we always, wait a minute, here we analyze the impact on thing, various aspect on finance. Right, Mansi, you are saying this right thing. So this is actually impact analysis. You also need valuation. Within valuation there is a technique DCF which I just briefed you a couple of minutes back. Relative valuation. Relative valuation is actually comparable analysis. You are comparing one company with set of other companies. So within the industry you are making a comparison. So based on this comparison, what is the price you are getting? Based on DCF valuation, what is the price you are getting? So this valuation knowledge is definitely you need to have. Okay, report writing skills, analytical mindset. These are some of the things that I have just talked about. But it's not that one person can have the knowledge of everything. Okay, in one particular profile, let's suppose they need the 10 specific skills, but you have, let's suppose, 7 skills. I'm just giving you for an example. 3 things, 3 skills you don't have. So it's okay. There are not people who have the even 7 skills. They don't have that. Okay, you don't have 3 skills. So it's okay, because you at least have 7 skills. These 3 skills you can have theoretically. So let's suppose you have you have interview tomorrow, but you already have 7 skills, 3 skills you don't have. Read them theoretically through internet or from whatever source you have. Read them from there and then go for the interview. And during the interview you have to handle this question, why don't you know these 3 things, and I'll let you know how you should handle those type of questions. Let's proceed. Research department, it is the most important department of an iBank, which has the job of doing research of stocks and equity and commodity and give recommendation if we have to buy, sell or hold the investment and why. This logic has to be given. Why we have to buy, hold or sell it. There are certain logics that we have to give to justify our recommendation. So we shall focus on equity recommendation. I just said equity research. In this profile, we do prepare financial models, we read company business, we do historical analysis, we make forecasting, we take assumption, we perform valuation and write research report to recommend the investors to make certain decision if they have to buy, sell or hold the equity. Clear? I have read it very fast because I had just explained you what it is equity research, what you have to do into it. Yes, clear with this? Sir, in classes, do you teach report writing? Yes, we do teach research report. And even I will give you the research reports today. Actually, research report is a topic which we have just added in our course curriculum. It was not added some time back. What I teach and what I don't teach, it is something which we can discuss later, personally, separately, or at the end of this webinar. So what I have planned to discuss, let me try and let me test myself also if I am able to justify with a lot of content in less time. I am also on test right now. I am testing myself. So research department, exactly what do they do under research department? They understand the company business, they understand the product, they understand the market, they understand the segment through annual reports or quarter files, quarter reports or press releases or various other sources, let's say website, and through various sources they try to understand these informations. They try to understand strength and weakness of the business, their productivity, their risk, their revenue drivers, everything they will understand, because without understanding these things you cannot prepare the financial model. If you are preparing the financial model without understanding these things, there is a theoretical thing which you are doing. Based on that, decision cannot be taken. Okay, so you will be reading annual report, you will be reading quarter file, you will be reading press releases, and then you will prepare a financial model, perform valuation, write report. This is what you will be doing in equity research department. So shall I proceed ahead? Have you read it? Have you read it? Yes. Shall I proceed? Yes, Mansi. Each and every aspect we should try to focus, but we need to keep in one thing also in mind, that too much analysis is also bad. We need to analyze maximum things, but there is a line. There is a very small line. Too much analysis is also very bad. So what we have to analyze, what we don't have to analyze, we need to be careful for that, and for that you need a proper training. Okay, thanks. Let's proceed. So who are the investors of an investment bank? I am getting into very interesting topic here. Who are the investors of research department, or who are the clients of that research department? They are corporates, they are mutual funds, pension funds, portfolio managers, HNI, insurance companies and other big clients with millions of funds with them. They are not people like you and me. If we need research reports, we go to brokerage houses. Okay, we will open a demat account there and they will share certain research reports which are not very detailed research report, but yes, they do provide us the research reports. We use them for our analysis and we invest based on that. So brokerage houses like India Infoline, okay, Edelweiss, Motilal Oswal, there are so many brokerage houses, but they There are brokerage houses, okay, who also deal with some big clients also. So investment bank don't deal with small clients like you and me. Their clients are AMCs, asset management companies, whose examples I have just written, like mutual fund, pension funds, portfolio manager, insurance company. They are AMCs, asset management companies. So these are some of the, not actually equity research. So this is equity research report. Clear? Going a little fast now because some more topics I need to touch upon. In the equity research report department, these are some of the industries, but not only these industries. You have to track them. Let's suppose tomorrow you get into this company, you get into investment bank. You will be given 1, 2 or 3 industries under which there will be 30, 40, 50 companies which you have to track continuously. Let's suppose you are giving media and telecom. It is written again. Media and telecom you are given, or you are given technology companies, or you are given healthcare, or maybe you are given 3 industries. And under these 3 industries, let's suppose there are 100 stocks which you have to track, analyze, and come out with recommendations. That will be your job on a day-to-day basis. It's not that 100 companies research report you will be preparing on a day-to-day basis. Whenever there is a particular CAX means corporate action, there is any press release, there is any news, analyze that, understand that, and see the effect of that thing on your particular sector and come out with a recommendation. I am now coming to the point how that research department is going to make money for the investment bank. Any idea, anyone? How research department is going to make money? Not exactly. They are not going to charge any fees. Generally, investment bank don't charge fees. They are providing that particular research report for free to their big clients, such as mutual funds, such as portfolio managers. So they are giving it for free to them. There is no fees involved. If someone outside the clientele wants to buy that research report, then they have to pay the fees. Fees means particular charge, but generally it is free. Now, these are some of the research companies: JP Morgan, Bank of America, Credit Suisse, Barclays, Citi, or some these are, see, and 1,000 more. Just for an example, I have given some of the companies here. So research department we have just discussed a bit. Now sales and trading department. Actually, research department will make money through sales and trading department. How? This research which they prepared was given to a mutual fund. Mutual fund now read that research report and thought of buying that shares, and they want to buy, they want to invest, let's suppose 100 crore in the shares of the company. Now if that mutual fund will invest 10 crore rupees in one shot in the market, the share price will boost a lot and it will affect the market. So what they want, they will ask the investment bank who has given them the research report, and that call will be directed to the research and sales and trading department. This sales and trading department will now find someone who is selling that particular stock of, let's say, Oracle. Research was on Oracle, and research department said that we should buy Oracle. Mutual fund decided to buy Oracle and they want to invest 10 crore. Now this call will be given to sales and trading department. They will find someone who wants to sell Oracle for that particular price which is determined, which is asked by that mutual fund. If the deal is done, this sales and trading department will charge commission only. So this commission is going to be the revenue of the company. Clear? Clear. So directly it is not making money. Sales and trading department through commission is making money. We are now getting into funds and raising department. Okay. So just described, people in sales and trading department are responsible to execute trades and generate commission for iBank. They are profit center of the iBank. Now, funds raising. Funds, how do we raise funds? Through debt and through equity. We just discussed about how do they work in fundraising department. Companies raise capital by way of debt and equity. iBank assist companies to raise capital in both ways. Both ways mean debt and equity. There are always institutions with surplus of funds and people with deficit of funds. So, investment banker IB knows both. There are people who have surplus funds, he knows them, and there are people who have deficit of funds. So he is only arranging the meeting with them, between them. That's the only job of investment bank. He will charge a commission for that meeting, for that deal. The deal will be organized between them. That's it. That is what the job of the department. But there are many other back-end operations also. Financial model, valuations, everything will be again done by the fundraising department also. If a company wants to expand their business, they need funds from internal sources or external sources. If they cannot generate funds from internal resources, then they have to rely on external sources like debt and equity. Then at that particular point of time, they will contact the IB team, and the IB team will transfer the call to the fundraising department, and everything will be arranged after that. Merger department, I have already discussed about this merger department, like financial model will be prepared, valuations will be done. Pitchbook is a new topic that will be introduced here. Pitchbook will be done, M&A analysis will be done, everything will be done here. Like in equity research department, other than financial model and valuations, they have to write equity research report. In M&A, they have to prepare pitch book, and M&A is a new thing. Here there is no M&A. In research, there is no M&A. In merger department, after financial modeling and valuation, we don't write equity research report. We write pitch book. What is a pitch book? Let's come to that part also. Pitch book is a kind of sales brochure. Like when you want to take our financial modeling course, I will give you a brochure. In that brochure, I have detailed many things. Clear? So that in this is also a pitch book. When we want to acquire some company, so we will prepare the financial model of it, we will prepare the valuation of it, then everything will be presented in the pitch book. In pitch book, we will also have company profile. What is a company profile? It is suggested by the name itself. What is company profile? The company which we are going to acquire, we need to put details of it, like business description, risk and reward, okay, the products, segments, market, everything, geographical segments, we have to write everything, historical analysis, and its competitors, its market segment, its market share, everything we have to write in company profile. Other than company profile, we have to prepare the financial model, we have to write valuations, and those screenshot, those analysis, we are going to write in pitch book. So that pitch book will be presented at the time of presentation, not the Excel models. Excel models will be prepared, but important aspects of the financial model and valuation model will be given, important analysis will be presented in the pitch book. So pitch book is a PowerPoint presentation. Are you getting it? Yes. Hello? Yes, getting it or not? Very good, बहुत बढ़िया, very good, very good. Is there anyone still who doesn't understand Hindi? The person, I don't, you can type, I don't understand Hindi. Is there anyone in the class right now who doesn't understand Hindi? Okay, very good. चलिए फाइनली आगे बढ़ते हैं. So what do we do in underwriting? What do we do in underwriting? Did we discuss about it, underwriting? You said that time, yes, understood. So in underwriting, we are kind of guaranteeing that we will Prashant, you can enroll for our course, but please understand whether this course is for you or not. Which particular type of profile you would like to go for. Okay. So in underwriting, you are guaranteeing that if IPO is not subscribed, then unsubscribed portion will be taken by the bank itself. Clear? So this way bank is actually taking risk on itself that if the IPO does not go well, then I will have to bear that. Okay, I will have to bear that. So it will do its complete analysis of the IPO, complete analysis of the company before it actually underwrites it. But this is not the profile that I would want you to work for. I want you to work in research department, fundraising department, M&A department. Restructuring also has some form of work, okay, in finance, but not too much. I have been a part of research, fundraising and M&A. Just 2 months of experience in sales and trading also. Even not 2 months, let's say 1+ month, only 1 month. 1 month, 10 days only. Okay, so sales and trading department is definitely too much interesting, but you don't get too much to learn and you don't get sufficient salary. Salaries are limited, so I don't want you to work there. I want you to work into research department, fundraising department, M&A department. If you, yes, someone is saying repeat. Anuradha, what do you want me to repeat? Can you please tell me? Highest paying salary. Okay, okay. I would not comment this way that who would be the highest paying salary, who would pay you the highest salary, which department, because it depends on your first qualification, your capabilities, your knowledge, and then your experience, your hard work, and I can keep on giving a lot of list, and then definitely company you are working for. But in general I would say M&A department, in general I would say M&A department would pay you higher salary. But when you get into M&A, you need all of this. You need so much knowledge. Even the business, you need knowledge of Excel, financial statement, ratios. These are things which you can get in just, let's say, 2 months of time. See, whatever you need, knowledge, subjective knowledge, technical knowledge, whatever you need, you can gain it in, let's say, roughly around 2 months to 3 months. But there are few more things which you need. Let's say business knowledge. Do you have the knowledge, business knowledge, any industry knowledge, knowledge about 10 15 companies? No. Even if you get into investment bank without the particular industry knowledge, you will be given the designation of some junior analyst or some research analyst. Gradually, when you will work in this particular profile, in this particular department, your packages will be higher. But again, if you get into this, let's suppose you are a fresher, become fresher, nothing else, become fresher, and you have done our course on financial modeling and valuation, that's it. Now if you can make into this, the package will be somewhere around 5 to 7. Okay, in M&A department, in research department it can be 4 to 5.5. In fundraising it can be anything, no comment on that. It can go either way, it can be less, it can be more. But I would say try to get in any of these profiles and try to get at least the finance profile. See, when you want to go to Mumbai, you board the train to Mumbai, from Delhi to Mumbai, at least you will reach to Mumbai. But if you take the train of Dehradun, how will you reach Mumbai? Important thing is you are on track. If you are not very old age, let's say 30 plus, then I would say that please inculcate the skills which are required for the profile you want to make your career in. पहले वो स्किल्स पाइए जिनमें आपको काम करना है, जिसके बेस पर आपको काम मिलेगा। वो स्किल्स मिल गई, अब उसके बाद भी बहुत कुछ है जो आपको करना है। कुछ नेटवर्किंग करनी है, you have to do networking, you have to update your profile on LinkedIn, you have to connect with hiring managers of different investment banks. I'll let you know if we maintain our relationship going forward. I'll let you know how, what kind of CVs do you have to prepare, what kind of post you have to make on LinkedIn, how you have to introduce yourself during the interview, how you have to fetch the interview first. If you don't get the interview at all, where will you show your CV? Where will you introduce yourself? How will you showcase your skills of financial modeling and valuation, M&A, Pitchbook, company profiling? How will you show them? Nowhere. So the first step is actually not the first step. It is actually the last step. First step is understanding and gaining the knowledge of financial modeling. Second step is to showcasing those skills on various portals. One of them is LinkedIn. Next, you have to understand how you have to prepare CV, how you have to explain your acquired skills to the recruiter. You have to understand that also. मेरा मतलब ये है, आपने फाइनेंशियल मॉडलिंग सीख ली, वैल्यूएशन सीख लिया, बट आपको बताना ही नहीं आता, तो क्या फ़ायदा हुआ? कोई फ़ायदा नहीं है। तो अब मैं, मेरे ख्याल से ना, नाउ आई थिंक इट इज़ द पॉइंट, एट दिस पॉइंट ऑफ टाइम आई शुड explain you, show you some financial models. Do you want to see some financial models, some valuations or something? Yes or no? CFA can get 4.5 to 7.5. Kindly keep yourself on mute mode. I would request you. Okay, where are the models? Yes. This is one model which I am going to show you. This is just one model. First model, I would say, first model. Okay, the model has opened. Not very, what should I say? Not very detailed, but yes, it is a good model. So here, what do we have? See, look at the quarterly income statement. Then we have annual income statement. Then we have balance sheet. Then we have some schedules. Then we have cash flow statement. And then we have historical income statement. Just one second. Chalo, let's work on this only. However, I have updated model also. It is actually 3 months or 4 months older model, but okay, no issue. So what do we have here? This is a company called Kellogg's. If you have to work on any company, if you have to work the financial model of any company, if your team leader, project manager, AVP or some client asks you to prepare the financial model of Kellogg's, what is the first step that you want to do? You want to go to Yahoo Finance. And let me tell you, this is not the first thing that you will always do. You can do many other things also. This is just one thing I am going to tell you. You will go to Yahoo Finance. This is the website. Okay. And here you will type the name of the company. Which company's model you want to prepare. Because I don't know what is Kellogg. I don't know. Do you know? You may know, but I don't know. So I want to study about Kellogg company. What is this company about? I don't know anything about it. Okay. So I'll go to Kellogg's company. So here, what does it say? It gives me some information about this company, like current market cap, 5-year beta, PE ratio, trailing 12 months. TTM stands for trailing 12 months. Trailing 12 months means last 12 months historical EPS. Bid ask price, some volume range, open high, something like that. Then you can go to financials. Here we have financials. I'll be spending 5 minutes only on this, and if you are interested, I don't have an issue. We can continue for 2 more hours. I don't have an issue. So this is income statement here. Okay, this is your balance sheet, this is your cash flow statement, and if you want to see the quarterly data, click on quarterly, then quarterly data will come here. Look at this. Okay, now come to analysis. Certain analysis will be done here, but it's not that everything will be done here. Some of the information, some analysis here may be done. Let's go to historical analysis. Historical data, not historical data, statistics. Just one second. Statistics. Historical data gives you the prices. Prices means open, close, average, something like that. So what we have here on statistics: market cap, enterprise value, trailing PE ratio, forward PE ratio, PEG ratio, PEG ratio, PEG ratio, price earning growth ratio, price to sales multiple. These are some of the information. But this is not something that as of now I want to read. What I want to read, let me take you there. So come on to the summary sheet again and come down a little bit, little more. And let me tell you again, this is not the thing which you can do only. This is not the only thing which you can do. You can do many more things to know about this company. So here we have the company website. That is the first thing. Sector is consumer defensive. Sector is consumer products. These are the products that they are selling. Industry, packaged foods. So they are actually selling packaged foods. So let's suppose if you don't know what is Ruchi Soya, what is Inox, what is PVR. Okay, so what will you do? Come here and read about it. And now what this company does, read about it. In just 2 minutes of time, you can figure out what is this company doing from this description. Just 2 minutes. And it is not the only place. There are many other places from where you can read it. Okay. So Kellogg's company operates through 4 segments. What are those 4 segments? North America, Europe, Latin America, and Middle Asia. So this is the most important thing, which is what I needed for my model. Its products are, these are certain products the company is operating into. Okay, so you can read it. I am not reading it and waste our time. So if you need some information, some more information, what will you do? Go to Google again and type the name of the company. Let's say Kellogg. Here also you can type, something will definitely come here. So that is the place which I told you where I frequently go. So you can go to the website and something will come here. So I need company's 10K report. 10K means annual report. So you will go to SEC filings. This is the website. Kellogg's company's page, direct page. You can go to kellogg's.com also and then find this particular page, or you can click on this. Simple. Now on this particular date, on valuation date, whatever is the valuation date, you will find what particular data is available. Okay, so I want annual files, I want quarterly files, whatever available on the day of the valuation. So I want annual, I want quarter file. So you simply download them. Okay, these are the quarter files. You can download them, and these data which you will get from the quarter file, you will need to copy them. So this is the quarterly data only. So everything that we have here is quarterly data. If in case you have to work on this model, you are not going to get this kind of model in hand. You will be starting from this, from absolutely blank Excel file. Okay, if you learn, let's suppose this financial modeling from IB Institute, from me, then we will be starting the model absolutely from here. And then here we will start typing something like, this is our quarterly income statement, and then balance sheet, and then annual income statement, something like this. So actually we will be starting from here, but this is not what actually I am going to sell. I am trying to explain you something here. So this is our quarterly income statement, we need to forecast things. So I need to forecast my revenue. So revenue will be forecasted based on the criteria. So this is a simple model in which we are forecasting the revenue of the company based on a simple growth rate. So based on growth rate only, after a few years, when the projection will start, we will be forecasting it. So this forecast will come here. Look at this. The duration of this course is only 3 months. So if you want to see, look at this. First, what we are doing, see, when you are making the model, everything that you do in a model will have 4 steps. You will be first historical data. You will need historical data. Then you will do historical analysis, and then you will take some assumptions. Assumptions can be taken based on historical analysis. Okay, assumptions can be taken based on management guidelines. Assumption can be taken based on your knowledge about the company. Assumption can be taken based on the objective of preparing the financial model. So these are some of the things which you need to keep in your mind when you are taking assumption. So based on assumptions, you will prepare your forecast. Now every item, let it be sales, COGS, SG&A, dividend, depreciation, capex, fixed asset, stock-based compensation, whatever, every item has a different projection criteria. So for every criteria there will be a different historical analysis, there will be different assumption, and then there will be a forecast. So now in this case, what we are doing, let me explain you. So if I have to forecast, let's say this item, revenue, this 3622 is actually the total of 4 geographical locations. Can you see? 3622 is actually divided into these 4 segments, and these segments are North America, Europe, Latin America, and EMEA. EMEA is a particular location. Okay, so what we need when we have to forecast total revenue, we don't need to forecast the total only, we will be forecasting this. For doing this, we will first do the historical analysis. Growth rate, and based on the growth rate, based on management guidelines, based on your knowledge, based on objective, you will be taking certain assumption, and then you will be forecasting. So this is a simple model, so it is forecasted in only one line. I am going to show you something very advanced now. This is very simple because we have taken only a growth rate. But only growth rate is not applied in every kind of model. Would you like to see? Yes. Where revenue is not forecasted based on a growth rate only. So I will take you to a new model. The model is Apache. Let me show you this model. I can show you Netflix, I can show you real estate, I can show you solar power project, road project, real estate project. So many models I can show you, which we are actually covering in our online recorded classes and in live classes. In live class, we don't teach many models, we teach only defined certain models. If you want to know about them, you can call back later. So I'm going to show you Apache model. This is Apache Corporation. Apache Corporation is a oil and gas company. In oil and gas company, there are actually 3 types of company: upstream company, midstream company, and downstream companies. Upstream companies are those companies which are actually into oil and gas production business. Downstream companies are refineries. So this model is of not refinery. This model is of those companies which are into oil production. Did you get my point? This is not a refinery model. This is a model of oil and gas production companies. Refinery model is little different. So let's suppose this. What do we have here in your screen? Let me take you this place first. This is your revenue, 44435. This is your total revenue, and this is actually another revenue, other income, and this is your core revenue, 4037. So this revenue is actually coming from the three different products: oil, natural gas liquid, and natural gas. I know you won't get many things, but I'm just giving you a understanding, like how models are actually prepared, right? So to forecast only this item, what you have to do, you have to prepare this. There are oil production, there are natural gas production, and there are natural gas liquid production. Those are three products, and they are making production in three different locations, like United States, Egypt, and North Sea. Clear? So this entire model which you can see on your screen, not just this, but this also, where we have assumptions. So actually, this particular, right from here till here, this particular model till here will only forecast one line item, which is this, So what do you suggest? What is the best way? When you have to forecast, you should forecast the total revenue, or you should forecast the revenue based on segments. Like IB Institute is providing revenue, like making revenue from recorded classes, college trainings, and this workshop, public workshop, yeah, classroom training. So if I have to prepare our model, should I prepare the revenue based on total revenue, which is 100 rupees, or should I forecast all these three, like 40 from here, 10 from here, and 50 from here? Should I forecast these three, or should I forecast only this 100? Tell me. If you have to prepare IB Institute model, would you like to forecast these three, or based on segment, or total revenue only? Gaurav Jairamji, you are not right in this sense, because if I forecast only this, I won't be able to analyze things much. I want to see where is that revenue coming from, and I even would not be able to justify my revenue projections. If let's suppose I forecast it, let's 110, how will I say that where is this revenue coming from? I won't be able to. So we have to forecast our revenue based on segments. That's exactly same thing we did to forecast my revenue. Like say how this revenue is coming. This revenue is coming from adding the revenues from three different products. Look at this: gas revenue, natural gas revenue, and oil revenue. Three things you have to do. Now how this is coming? Oil revenue is coming from adding the revenues from United States, Egypt, and North Sea. Then how revenue of USA is coming, and again this. So actually it is a step by step process which you have to follow. It takes around 8 to 9 hours to make this model, and you have to prepare it at least two times, not at least two times, but two times, including class three times. So you have to prepare this model three times to understand how an oil gas model is prepared. Let me now close this without saving. If you want to go through this also, I have just taken you through this. Now close this also. I want to show you something else also. So many things I have opened. Now this is Netflix. You want to see the model of Netflix? See, in every model, the revenue is different, model is different. See, can we use the hotel model with steel model with cement company model, cement company's model with aviation model, or with some model of infrastructure or some school, hotel. Can those models be same? Can we say that all models are same? Yes, everyone. We are, I think, at the end of this webinar. Within 30 minutes, we should be able to end it. So let me know. We cannot use it now. But can we use the knowledge gained in one financial model and apply that knowledge on other financial models? Yes or no? Definitely yes, Gaurav. Very good. See, please open your chat and let's connect with each other. We can definitely connect, we can definitely use the knowledge. But do we have the sufficient knowledge of one model and apply it on other model 100%? Not yes, no. If I am making the model of refinery, now I am making the model of solar power project, now I am making the model of some infrastructure project, then I am making some road project, then I am making the steel company, then I am making aviation, then some another bank. There are certain things which are common, but there is one thing which is definitely not common across different sectors: cement, steel, IT, technology, other aviation, or other sectors. One thing is definitely not common. Can you tell me what is that? There are certain things which are common. How to prepare model other than you teach? I will teach you concept which you can use and apply everywhere. My question, please try to answer. What is that one thing which is different in every company? And let me tell you, will you tell me? Yes. Different growth rate? No, 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 no. Different customers? Okay, maybe something. Okay, okay. Let me tell you, it is revenue. It is revenue which is coming from different sources. Hotel revenue is coming from room occupancy and tariff. Clear? Aviation, aircrafts are there. The revenue is coming in a different mode. How many flights? How many seats? How much charges per seat? Revenue stream different. Then we have telecom. In a telecom, revenue is coming from average revenue per user. That is the projection criteria. In case of oil and gas sector, how much product per barrel? How much we are charging per barrel? For oil, natural gas liquid, how much we are charging and how much we have the cost. So actually what I'm trying to say, if you are able to prepare 2 or 3 financial models, you will know, let's say 70% things which you can apply on other companies, 70%. But one thing which is definitely different and which you have to learn is how to forecast revenue of that particular sector. Okay? And how do you learn that? I will tell you. Within the class, I'll tell you roughly around 15, 16 sectors. How you have to forecast the revenue for those particular sectors. I will tell you. But am I capable of teaching you 15, 20 sectors within just 2 months of time frame? No. You will need 10 years of experience for that. Because no investment banker will ask you to prepare 15, 20 sectors from one particular candidate, from one particular analyst. Did I not tell you this thing? That you will be given only 2, 3 sectors when you will be working in the research department. Did I not tell you? I told you. So जो आप केवल 2 या 3 सेक्टर पे काम करोगे, सभी सेक्टर पे नहीं. बट मैं अपनी क्लास में आपको बहुत सारे सेक्टर्स की नॉलेज प्रोवाइड करता हूँ. अभी वो सेक्टर की, अभी उसकी बात नहीं कर रहे हैं, कोर्स नहीं बेचना मुझे अभी आपको कुछ और भी दिखाना है. तो जैसे हमारी वी वर टॉकिंग अबाउट financial model. I have shown you some financial model. Let me show you some relative valuation model. So on your screen, this is the relative valuation model. Let me open that. We will come to know that how to do analysis of different sector after practicing all of them. Right? हाँ हाँ ठीक. So look at this. This is one relative valuation model. In a relative valuation model, our objective is actually to calculate multiples such as enterprise value, this revenue multiple, EV by revenue, EV by EBITDA, EV by cash flow, EV by EBIT, PE ratio. These are some of the multiples that we have to calculate. Okay. Then these are some of the comparable companies like IBM, Oracle, SAP, Microsoft. These are Infosys. Then this Apple, HP, and Sharp. These are some of the companies. Now this is output sheet. Every company which you can see here is actually a different sheet. Let's say Infosys. Infosys data is here. So on this sheet, what I have to do, I have to calculate these multiples. Can you see here? E by revenue, E by EBIT, E by EBITDA, and P ratio. So I will be calculating them on what basis? Based on the data which you have to put in. So when you go to the office in an investment bank, this kind of model template will be given to you, and you will have to put data of that company in colored cells, in yellow, blue colors. These white colors or black cells, you don't touch them because they are formulas. You don't touch them. Okay, you just put the data into these cells, and based on the data, automatically things will be calculated. What things will be calculated? Like these are only formulas. You don't touch them because we are using them for a purpose. Okay, so if you take my sessions, I'll teach you how to prepare this model from here. Blank Excel file we will be using, and we will be creating the model template. But in office, initially you don't want to make the model. Basically, no one will ask you to prepare the model. They will ask you to update the data and understand the model on your own. Maybe 1 year down the line or 6 months down the line, when there is a requirement and senior is not available, then you may get a chance to update the model also. But if you don't know how the model is created, then you will not be able to update the model also. Okay, so functions like this, let's say you can see here, this is something called calendarization, which I'm going to show you here. Can you see the size of the formula here? Can you see the formula size? This is calendarization. What purpose we are solving here? What happens in this model? We are taking companies from different countries. अलग अलग कंट्री से हमने डेटा लिया है. तो सभी कंपनियां क्या हैं? कोई मार्च एंडिंग है, कोई दिसंबर एंडिंग है, कोई जून एंडिंग है, कोई सितंबर एंडिंग है. तो वो कंपेरेबल तो है ही नहीं. दे आर नॉट कंपेरेबल. So to make them comparable, we are doing certain adjustments so that every company is December ending. Every company is December year end. So then they will be comparable. And this process is called calendarization. Did you get it? Calendarization. So now I am going to share the WhatsApp group here, which you will have to join, and I will share these models which I am showing you. I will share Pitchbook research profiles, research reports in that particular group. Okay, so now is the time when I can share with you this particular group link. You can join that group, and I will share with you, and you can discuss with me if you want to discuss, because those people who have left, there are 6-7 people who have already left. So if they have left, that means they are not interested in knowing things, or they did not find it useful, or they did not find interesting to listen from me, or whatever is the reason, or internet has gone off. So I don't have an issue with that. So I'll be sharing with you one WhatsApp group with you, where I will share many things. Okay, so here we have the output sheet, where the output of all the sheet is coming. Then these are all input sheet. On different sheet we have different companies, and here we have the control area, like we have switch. If you change the values here from USD to INR, or to let's say GBP, all the data in these sheets will automatically change to GBP. So let me show you here output sheet. So data is right now in GBP. You can remember one particular value. Let's say this 117,250. I'm coming here and making it USD. Now come back again and see the data is in USD and it is different value. Earlier it was 117 something. Now actually what we are doing, this is a control area. You change something here, things will automatically change in different sheets. Here we have currency converter. This is called currency converter. The data will be picked from here and it will do certain calculation. So how these calculations are performed, I teach in my class, but you just understand that these things are actually used in our investment bank. I'm closing it, closing this also. Okay, this was one relative valuation technique. This is another one. Let me show you now Mna model if I have that. This is Mna model. Oh my god, this is blank. Just one second. No, it's not blank. It is solved one. So if you see, this is one basic model. I won't say this is very comprehensive. This is one model where we have one acquirer and we have one target, and we are just planning this company. Acquirer is PNG and target is Gillette. We are simply acquiring this company at $45 of offer. So here we have some acquirer data, we have some target data. Okay, here we are calculating the deal value. Based on deal value, we are calculating shares issued that will be issued to the target company. So clear. So we have acquirer balance sheet, we have target balance sheet, we have some adjustments before we make the performa. Performa means combined balance sheet. Did I say combined balance sheet? Acquirer and target and some adjustments. And here we have the calculation of goodwill. Okay, how goodwill is calculated? Total purchase price minus fair market value of net identifiable assets. There are certain calculations which you have to perform. It takes roughly around 6 hours to understand this model, theory and practical. Then we have income statement, and then we have performa EPS. Performa EPS means after acquisition what will be the EPS. So we have acquirer, sorry. So we are now comparing, this was our, just one second. This was the EPS of the acquirer before merger, and this is the EPS after merger. We will now do a comparison how much EPS is going up or how much EPS is going down, something like that. So this is one Mna model, but yes, this is not the most complicated model. This is an intermediate level model. This is an intermediate level model. So because we do not have time and I think people now want to leave, so I'm not showing you very advanced model also. This is the model which I teach in my class. Okay, so research report, here is these research reports are for on Indian companies. If you want, I can give you some international research report also. So I'll give you, you can open them and see them later on. So anything that you want to ask from me now, I open the discussion from you. Now I'm opening the discussion for you. You can ask me questions if you want. If you want me to do something else in the webinar, you can ask me, or yes. If you have any query, you can definitely ask me. I am opening the discussion for you.
Hello.
Yes.
So Sumit here.
Yes.
Just wanted to ask that if I wanted to switch my career from housing finance company to IT. So from where I need to start to get into IT? From where I need to start my career from? In which segments like research or fundraising?
Let me be very clear in one sentence. From the segment which I had told you, start from wherever you can start. But keep in mind one thing, it should be a core finance profile. Core finance profiles means you should be using Excel, you should be using financial statements, or you should be doing some kind of either valuation or financial modeling. Either financial modeling or valuation, or you should be preparing research report. In research report writing, you interpret the financial models, you interpret the valuation, you interpret the ratios, and then you write the report. In the equity research department, it is not that one person is doing everything. Listen to me carefully, everyone. This is very important. One person will not be doing everything. One person will be creating finance model. One person will be doing the data mining. One person will be using the data and updating to the financial model. Someone will be moderating the entire project, entire process. Someone will be using that model, complete model, and he will be preparing valuations on that. And then someone will be writing the research report. So within the research report, there are certain profiles which are not in finance. So when you get job description, read it very carefully. What type of questions were asked in the interview and what is written in the job description. Accordingly, based on that only, you should take your decision whether this is a finance profile or not. So finance profile means some financial statements reading, use of Excel, and forecasting and valuation. So something should be a part of it. No company, no investment bank will ask you to do everything start to end. Start to end means prepare financial model, prepare valuation, prepare Mna, prepare pitchbook, prepare investor documents, everything. No one is going to ask you to do everything. Gradually, over a period of time, they will assign you different tasks. When you are comfortable with one thing, they will ask you to do other thing also. So focus on the profile, don't focus on the department. Once you get your profile, how to select which one is suitable. I told you Shri just now, अभी अभी मैंने आपको बताया ना कि आपको क्या देखना है उस प्रोफाइल के अंदर, कि प्रोफाइल के अंदर फाइनेंस के कॉन्सेप्ट्स होने चाहिए. आप फाइनेंशियल मॉडल्स पे काम करो, आप वैल्यूएशन पे काम करो, आप एमएनए पे काम करो. एक पर्सन तीनों पे काम नहीं करेगा इन जनरल एट ए टाइम. Consultancy is a profile where you are asked to do many things on your own, but otherwise in many companies they don't ask you to do everything. You are a part of the process. मेरे ऑफिस में आई बी इंस्टीट्यूट में आई डोंट डू एवरीथिंग. मैं मॉक इंटरव्यू लेता हूँ और बच्चों को पढ़ाता हूँ. मेरा दो काम है. इंटरव्यू जॉब अपॉर्चुनिटीज लाने का काम किसी का है, प्लेसमेंट के लिए कंपनी से बात करने का काम किसी का है, और एडमिशन लेने का काम किसी और का है. तो सेम वे इन ए कंपनी लाइक इन्वेस्टमेंट बैंक, यू डोंट वर्क ऑन एवरीथिंग, you work on one specific thing. Yes.
Sir, good evening.
Yeah, good evening, Kritika.
Sir, the thing is, I'm the part of retail banking from last 4 years. Okay, but the thing is that I'm not satisfied with the profile I'm having. I'm in operations only, but the type of work I'm doing that does not suitable for my education. I have done MBA in finance. तो सर जैसे कि मैंने क्लास इसीलिए ज्वाइन की थी जस्ट टू मेक माय करियर इन कोर फाइनेंस प्रोफाइल. तो मेरा क्वेश्चन ये है कि जो इंटरव्यूअर होगा वो मुझसे जब ये पूछेगा कि व्हाई यू वांट टू स्विच फ्रॉम रिटेल बैंकिंग टू इन्वेस्टमेंट बैंकिंग, तो हाउ शुड आई टैकल दिस?
See, everyone knows why you went to that profile. The reason is at that time you did not get the right kind of opportunity, so you ended up getting that profile there. But you don't answer it like this.
Okay.
There are many ways to handle this kind of questions, and question and answers, everything has been written. If you want to be straightforward, you better be. You can straight away say that, sir, when I got this profile, I was asked, the company asked me that they will be offering me this profile, but they did not offer me that profile which I wanted to, which they offered me initially. Job description was related different, but they gave me this profile and I continued with this profile because initially I was enjoying it. But now I want to bring my career on track, and to bring my career on track, I am not just applying for profiles randomly. I have upskilled myself and I learned what you require. You require a candidate who has the knowledge of financial modeling, who has the knowledge of valuation, who knows merger acquisition analysis. And very recently, I have developed these skills practically from an institute called IB Institute. There I have learned these things. How do we analyze things? and this is exactly what you require for this profile, sir. अब मुझे बताओ, जो मैंने ये आंसर किया, इतना ही कॉन्फिडेंस किया अगर साथ आपने आंसर कर दिया, तो he is now not interested in what you did in 4 years. He is now interested what you have learned recently.
Right.
Now, Kritika, if at all he is not interested in you, leave that company, apply somewhere else. When you are good candidate, there are people who are looking for good candidates, but you need to be visible to them. If you are hidden somewhere, no one can find you. Let's say, if I don't conduct this webinar, if I don't advertise on Google, Facebook, if I don't create YouTube videos, then who would know someone Manoj Kumar is there in Patel Nagar and is providing financial modeling? So you need to be skilled and you need to be visible. So how you need to be skilled? You need to learn financial modeling and valuation from wherever you want to learn, and you need to create a network on LinkedIn and through various other sources that I will teach you, so that when they want to find someone like you are visible to them. They call you, they ask for your CV, and they take your interview. Okay? Yes.
Right, sir. Thank you so much, sir.
Okay. I have pasted the WhatsApp link here. If you want to join, you can join. That click on that group and join that WhatsApp group. I'll share the details there only. Yes, someone else is asking something.
Yeah, Manoj, I have just have a question. First of all, thank you so much for.
Gaurav, please you continue. Someone else is also speaking. Please you keep mute for few minutes. Gaurav, you continue.
Sure. Okay, thank you, sir. So, like my sir, basic question is like as a me, I was right into my colleges, Manoj, sir, I started less than for services. It was basically a call center, and then I joined Motila Luswal as a relationship manager, and now I'm completely working with a different organization. So, what do you think? Will that be a problem to explaining the interviewer why switching three profiles over a year and year? Like, what do you advise on this answer?
See, Gaurav, things have been actually complicated a little. When you leave companies year after year, if you don't stick to one company in, let's say, even 2 years, even for 2 years, then this is a problem definitely. But what we need to see your CV for how many years, for when did you leave that previous company, when did you join the next company. We can uh, uh, frame a particular answer for this particular question, and we can sort out the things based on, see, we can sometimes even change our historical experience, or sometimes we have to go for some internship somewhere. Like very recently, one of my student, he got placed in a company called SG Analytics. This is the same problem with him also. Like, you left a couple of companies 6 months or 1 year. He also left many companies because he was not getting the right kind of profile. He was company secretary, so he left one company and then another company and then another company. He also worked in a law firm. He also worked with a CA. He also worked with some accounting firm. So he was getting irrelevant experience and he was leaving company, and there were breaks of 6 months, 3 months between two jobs. So what we had to do, we trained him. We trained him how to prepare CV, how to create a network. But network didn't help him. We got the job opportunity for him. Based on our recommendation, based on my recommendation, he was interviewed. He was selected. But company said that we don't expect him to stay with us. So what we want, we will take him on internship. Can you believe this thing? He was only offered 15,000 for a month, and he was asked to stay with the company for at least 3 months. Then we will give you the final offer letter. And can you now believe me? Within 1 month, the first salary was 15,000 only, but second salary was not 15,000. It was full salary. It was not just stipend. It was not internship. It was full salary, and I am not getting the correct figure in front of me. It was 5.5 lakh. Ankur sir. So it was 5.5 lakh immediately after one month annual salary. So now did I make my point? That sometimes you have to go for internship to justify your stand.
Yes, I think that was pretty much explained in simple words. Also,
So
like
if you want,
the last
I can show you both the offer letters. The first month of offer letter where internship was given, and then after 1 month what internship, what salary was given. I can show you both. Do you have that? Can you show in email? ओपन करो, मेरे पास शेयर करो इन्फो पे। मैं आपको दिखाता हूँ 2 मिनट के अंदर। मेरे को अभी दोनों चीज़ें शेयर हो रही हैं, मैं आपको आपको ईमेल पे दिखाता हूँ। यस, एनीवन एल्स?
Can I ask one question?
यस यस, व्हाई नॉट, श्योर।
Eligible sessions. I want to ask to become a credit research analyst with any bank. I'm also preparing the models for like ICICI portal, but I'm not getting the right card to enter into.
Your voice is very low. I don't know what is the problem with my laptop or somewhere else. Just hold for it. Just hold for a second. I'm connecting. You are audible. Yes, try to tell me.
So, to become credit research analyst, will you do the same way financial knowledge?
See, if you want to become credit research analyst, as I told you, every profile has some common skills required and some additional skills also. So definitely in credit research you need Excel, you need the knowledge of financial statements, you need the knowledge of ratio analysis. Now you need the knowledge of credit research also. Common skills, definitely I have talked about Excel, financial statement, ratios, financial modeling, valuation. But now if you get into a different set of profile, these skills will definitely be required. One or two more additional skill will also be required, which you can inculcate yourself, or you can ask me. I can provide you some document, some PDF or some video description, something from where you can learn that also.
Okay, so you want to say that these three things will fall at the same place, but additional things can be provided by you.
Yes, like I told you, if you go to research department, Mna is not required, Pitchbook is not required. You require the knowledge of research report writing. Research report like this. This is a research report. Just 1 second, I am opening it. I'll also show you one, what should I say, Pitchbook. I can show you one Pitchbook also. This is one recruit research report. So this is a description. This is a description why they are recommending buy. Why the company is recommending a buy for this. They are saying current price is this, target price is this. They are showing it. I'll be sharing with you this profile, this particular PDF file. You can read it. See,
Buy side here.
this is they are buy recommendation buy. So see what they have written here. This is a snapshot of their financial model. 2020 actual data, 2021 expected data, estimated data, forecasted data. So what it is, this is your financial model. They have calculated some ratios also. Based on this, they are making a recommendation of buy. If you go down a bit, you will find this is price performance in comparison to Sensex. Okay, all of this will be prepared in Excel first, and then you bring them in your PPT or Word document, or document which they have to prepare these research reports. Look at this particular data. This is your balance sheet, this is actual balance sheet, and this is your forecasted. So where it is coming from? anyone chat पे बताओ सब लोग, क्या ये फाइनेंशियल मॉडल नहीं है? क्या ये फाइनेंशियल मॉडल नहीं है? Income statement, historical, forecasted. So this was Excel and you brought it into research report.
But the structure would be the same for all the research reports, or it may vary.
Nee, see what you have to keep in mind, couple of component which you need to provide in the research report. It's not same every time. You have to provide business description, base, small description about business, and then recently what they have done, what are their future plans, and what are your estimates about income statement and balance sheet and certain ratios, and maybe valuation. Like, see, here we have important ratios. And here we have the valuation matrix: price to book value, EV by EBITDA, diluted P ratio. These are the same thing. Did I not show you these things in my relative valuation model? Yes. Do you remember? Yes or no? Do you remember that I was showing you P ratio, price to book value in my relative valuation model? So things are coming from there. If you have to send some recommendation to your client, you don't send Excel model. You send them this PDF, PPT, research report. Okay. Chalo. Let me show you one, what should I say, Pitchbook also. Give me just 1 second. Just 1 second. Just 1 second. This is actually January model in which we were conducting the Pitchbook class today. So I am just giving you, showing you the Pitchbook, which was completed yesterday. Look at this. This was the class work actually. In the class we have explained them to prepare this thing in Excel and prepare the historical data, prepare this historical chart, and these are the recent news, and this is the business description. This was yesterday's work, because in one class how much you can teach. So it took us some time to explain and prepare this overall structure. Latest announcement, offer price, acquired details. Are you getting it? Pitchbook is what? When you are going to acquire certain company, then you prepare a pitch book. So research report is different and pitch book is different. Let's open the another one. This is a training PPT in which we are going to show you many things, like how do you prepare a pitch book. It's a 55 pages of pitch book, and here we are showing you, just a second, what content you have to provide in a pitch book. Anyone, any idea? So components of a pitch book. These are components of a pitch book. See, pitch book on your screen. This is a pitch book. See, this is industry analysis. Deals in the sector. There have been many deals in the sector. So you have to go through this entire PPT, and accordingly then you have to prepare a pitch book. I want to be able to give you this PPT because I cannot give it to you. Yes.
Sir?
Yes.
Hello?
Yes.
Sir, am I audible?
Yes, you are audible to me. You can ask.
Sir, right now I'm in a final year of my